Hello, my name's Adva Saldinger, and I'm here for a special edition of Devex's podcast, This Week in Global Development, focused on the World Bank and IMF annual meetings. I am joined by Lord Mark Malloch Brown. Mark, thank you so much for being with me.
Pleasure to be with you.
So, this is a really interesting moment for these institutions. They're marking their 80th anniversary, and the world looked a lot different 80 years ago. The challenges were different. The political dynamics were a lot different. And you are, really involved with an effort that you called sort of a major health check on these Bretton Woods initiatives. And so I'm wondering if you can take us a little bit behind the scenes of some conversations that happened a few weeks ago at the same place where these institutions were created, and give us a sense of what were the real conversations there and how you think these institutions could evolve to really be fit for purpose for this modern era.
Well, yes, we assembled the leadership of both institutions, the heads and their top management teams, and 25 or so outsiders at the original Mount Washington Hotel in Bretton Woods, where these two organizations, the World Bank and IMF, were originally conceived. And, what we sought to do was reflect on that original moment of ambition when, everybody says, well, it was the end of the war or near the end of the war. Everybody could put aside petty issues and think big and be statesmen because there was a world to recover. And actually, that wasn't really the mood of the meeting, we reminded people. There was politics then as there is now, and a lot of scrapping around who got what share of the institution, and all sorts of people had their own causes. The Europeans were worried about European reconstruction. The Africans were barely represented, and Latin America really had to stand up for the whole of what we would now call the global South. So and yet, despite all of that, somehow they did summon up the ambition to do something very big indeed, to create two institutions which have certainly had their share of critics over the years, but have weathered the intervening decades as a critical part of the system of crisis management in terms of the IMF and of long-term development in the terms of the World Bank. So the sort of call to all of us at this meeting was, how do we try and rediscover a little of that spirit and ambition? Because the argument was that this isn't just an 80th birthday for the two institutions. It coincides with a moment of insidious crisis, in its way perhaps as consequential almost as that of 1944. Many people call it the polycrisis, but whatever you call it, are really dangerous conflict situations in the world. There is a dramatic increase in tension between the US and China. There are middle powers like India, Brazil, South Africa, others pushing their way forward, wanting a bigger say in institutions like this. And there are a ton of small countries who were not there in 1944, but now make up the 190 membership plus of these institutions, who want to be heard, who want the financial strategies, development strategies for their countries to emerge from, a real partnership, a real collaboration, and not to have a kind of 1944 colonial era, this is how you're going to do it, top down kind of instruction. So, and just to finish out the picture, you've got this dramatic political change, this redistribution of power from the situation not just of post-war, but of many of the years since. But you've also got all these crises. You've got a climate crisis. You've got a growing inequality crisis. You've got, implications in terms of low growth and inflation, the huge demands of a future green transition to a sustainable energy system for the world, and a real sense that not just these institutions, but the wider global political leadership is simply not gripping the problem with sufficient ambition yet.
So let's talk a little bit about that ambition, because we have seen some talk of some movement of reform, certainly at the World Bank and some of the multilateral development banks, the sort of initiative driven by the G20 around capital adequacy framework and really forcing these institutions to look at how they could do more and lend more with their sort of current capital, especially important in this resource constrained, especially when it comes to concessional capital world. How do you evaluate the reforms so far? I was really struck just in the last few days. Fitch came out with a report that showed that the 12 biggest multilateral development banks could actually lend like 480 billion additional dollars before they would threaten their AAA credit rating. And that has often been sort of used as the excuse of why they can't lend more, why they have to keep their debt ratios at certain levels. And so I'm curious how much more you think there is to do with these institutions and if there's the political will to do so.
It's a really good question. I think, look, the roadmap of reforms that the World Bank has adopted and, which has particularly accelerated since Ajay Banga became the president a bit more than a year ago, and the reforms that the IMF has undertaken under its current leader, Kristalina Georgieva, are very consequential. I mean, the IMF was able to do a ton during COVID in terms of support to weaker countries. The bank is increasing its lending, is making big commitments around both the development side and the climate side. And so I think both get, big improvement prizes. But I think the reason the two leaders asked myself and a couple of other outside advisors to take on this task of where next for the institutions is because it's not that the institutions aren't trying very hard to change. It's that the scale of the external crisis is just growing at too rapid a pace. Better is not enough. These institutions need to find ways to really recover something of the stature of their early years relative to the size of the world economy.
I guess to push you then on one thing, you talked earlier about how in the original Bretton Woods discussions, Africa was basically not represented. So as you're going through this process of, helping to lead these discussions and advise these institutions about how they adapt, are you changing that? Are you including African voices? How do you ensure that that partnership that you were mentioning comes about? Because it does probably mean some potential structural changes at these institutions and just a shift in the way decision-making happens.
There are changes in the governance for both institutions vis-a-vis Africa, with a third seat in the case of one of them. And, and we, in terms of our exercise, I've just come back from a consultation in Abidjan, Côte d'Ivoire, where I was joined by one of the two other members of the External Advisory Committee, who is himself a former Prime Minister of Côte d'Ivoire. We have consultations planned in South Africa, I hope in Nigeria, and also in Morocco. So, and we've had a number of meetings with the African executive directors of both institutions, and the G24 and others where there is strong African representation. So, all round, we are really trying very, very hard to make sure that this time Africa is heard loud and clear, and we have a major planned social media engagement for whom one of the target audiences will be younger Africans.
And so what is your sense, at least from those initial meetings in Côte d'Ivoire, about what some of the demands or wish list is from African nations from these institutions?
Well, I think it does. It doesn't. There's not a uniform view. Let me just be clear about that. It depends where you're sitting, whether you're in government or a young civil society leader. There are big differences. But I think some of the themes which came out strongly are this real wariness of debt. One sometimes thinks the debt wariness is just peculiar to the economists inside the World Bank and the IMF, and to it's not the case at all that African leaders themselves are, run very scared of debt, which they think is going to reduce their investment, attractiveness and grading. So that's one issue. But for whether you're in government or a young civil society leader, another issue is very strongly a view that the collaboration around, particularly with the World Bank development strategy, needs to be, one of real cooperative partnership and not one where the bank kind of rides into town, and says how it's going to be done. There's a view that nowadays, there are some very capable, well-trained people on the government side of the table and in senior civil society leadership in country who should all also have a say in setting strategy, and indeed that the only successful path to development is government-led development strategies which have a long life tail to them, that they're likely to continue, for 10 or 20 years, and, not just reflect the priorities of a particular generation of World Bank sort of country teams or economists. So, there I think is, a real demand for that kind of local ownership, if you like.
So just trying to get a sense from you looking forward. So you're doing this consultative process. You're going to come out with some recommendations. Are there any early sort of insights or thoughts that, there's been a lot out there in the last few years about how these institutions can change. We have seen certain things at IMF. I think IMF will have to look at quota reform. That can was sort of kicked down the road last year. We did see some movement at IMF actually last week, making some changes to its surcharges, the sort of additional fee that it charges countries that are doing a lot of borrowing or heavily in debt to the IMF. And some people see that as sort of a positive sign, but there were a lot of calls to eliminate the surcharges altogether. So I'm curious to hear from you what you make of sort of the current position. Are there any sort of specific changes, reforms, et cetera, that you would like to see from these institutions?
Yeah, well, look, let me describe it this way. I think both institutions, have this sort of challenge. They've evolved over 80 years, but they've got left behind by the state of the world today. The world has a more distributed power system than the two institutions, and quota reform is one reflection of that, but it's only one. It's an important one, but it's only one. And, as I look, at the governance issue of both institutions, it's in the case of the IMF, how does it reinforce the neutrality of its surveillance and crisis management tools so that they are universally available and, prescriptively universal in terms of surveillance, without fear of politics or in any way sort of bending to political winds? How do you absolutely reinforce and secure them the legitimacy that this institution is, acting in a neutral, technocratic way to, address the needs of different countries? Secondly, and I think there's a similar agenda for the bank, which, both institutions always risk being seen as, the ones that the G7 turn to sort of bail out, strategic allies when there's a problem. They've got to be seen as being much bigger than that, as being, at the, available to all their members. So there's a sort of political agenda that goes wider than just the quota, important though that is, in shareholding. But then there's an economic agenda where, they need to demonstrate that their economic vision, is contemporary, both in the level of its ambition, that they understand that the transformation of the sort of developing world is going to cost trillions, not billions, and that they have a resource strategy, not necessarily of their own, but of a broader mobilization of capital from many sources to address that. And then, I think similarly around partnerships and business model, there's a lot to get right to make them faster, nimbler, better partners, better able to mobilize third-party resources, all of which, comes from an agility and an outward focus that often seems missing in the institutions at present.
Great. Well, I think those are some good marching orders, and we'll be really curious to see what sort of specific proposals might come out of these consultations that you're leading, and always grateful for you to share your insights on what's happening at these institutions.
Well, Adva, thank you. It's always pleasure to talk to you.
Thanks, Mark. While making these international financial institutions fit for purpose is critical, today's development and climate challenges will not be solved without more money, including that which is funneled through these organizations. And there is a big upcoming test of whether donors will back up their calls for reform with new money. And that comes in the form of the replenishment of the International Development Association, or IDA, the World Bank's concessional fund for the world's poorest countries. I sat down with Gargee Ghosh, the Gates Foundation's President of Global Policy and Advocacy, to check in on replenishment efforts ahead of the December pledging event in South Korea. Here's our conversation. I just wanted to get a sense from you. I know you guys are really engaged in all the conversations happening about IDA replenishment. And for people who don't know, IDA is the World Bank's fund for the poorest countries. It's a really vital resource for a lot of these nations. And so what we know is that there's this big replenishment moment that's on the calendar. It's only a couple months away. We know it's going to be on the agenda at these World Bank-IMF annual meetings. But what can you tell us in terms of what's happening behind the scenes? What are the negotiations and conversations looking like in terms of the pledges that we might see at the replenishment in December?
In the past couple of years, it's become clear to me that a lot of the basic institutions that are the foundational pieces of development are really worth defending in a moment when the world has so many crises, so many challenges to focus on. We've been really worried that some of the basic institutions that support development progress are threatened. IDA is one of them. It's not the only one, because you and I know development is actually funded mostly by countries themselves. And so we're also thinking about debt burdens and the fiscal picture in low and middle income countries overall. But on top of that scaffolding, IDA is probably the biggest and lowest cost source of financing that supports anti-poverty efforts. So the numbers around what IDA does are so huge that your mind kind of spins. If you think about in our world, just last year, 70 million people reached with health, nutrition, population services. 90 million women reached with antenatal care. But, those are really the lives of individual women and families that have been lifted up by the world collectively agreeing to create this fund of low-cost financing to support development. And so to your question today, I think, the IDA model has been a great buy for donors. And IDA will talk about every dollar you put into IDA, because of the mechanics of how their lending works, can be converted into $3.50 for countries to put to work against poverty. So
I think they often say $4.
Okay, well, there I am. I'm being conservative then. So it's a great buy for donors. And every few years, the bank goes out to replenish its IDA funds so that it can put those monies to work. So it's a replenishment model. It has been really a success for many years, and a success that donors have, in a way, just known they want to contribute to and done their job. But this year we are finding that it's been important for us to add our voice and remind donors how critical IDA is for the work that we all do. And so, we have really put our voice and our weight behind African leaders who've called for a $120 billion IDA this year when they look at their projections of what it will take to grow, how to overcome some of the COVID setbacks. The number that group of leaders has articulated is $120 billion.
And my understanding is that would take about $3 billion from donors to unlock that $120 billion, if you're looking at sort of a 4 times leverage ratio, right?
Yeah.
And so I guess the real question, though, is that a realistic or reasonable target? Because this is a time of really constrained aid budgets. We're seeing a lot of countries, traditionally big donors to IDA, actually reduce aid budgets. We obviously have the U.S. election happening in just a few weeks. So what does that picture look like? How realistic is it to get to that $120 billion mark?
Sure. Well, I am a huge fan of the Mandela quote that everything seems impossible until it gets done. And as you know very well, IDA is a negotiation right up until the last minute. So we will know the answer to that question in South Korea in December. What You're exactly right on the numbers. This would be, the last IDA round donor contributions were just north of 20 billion. So this is an increase. And we have seen some exciting early pledges like Denmark coming in with a 40% increase. And we've also seen some really worrying signs as donors, particularly in Europe, that we count on. Germany and France are talking about cutting their ODA budgets overall. And so we are really worried about how the numbers work together. We also know that these donors get the importance of IDA, get the importance of development as an investment in stability, in prosperity. And so I'm really hoping that we are able to take the early first movers and use that as a way to crowd in donors to at least maintain in real terms and hopefully have a good number of them being able to increase contributions.
Yeah. So a couple questions. One of the things that I know that's going to make the IDA replenishment picture more challenging is that in a lot of big IDA donor countries, actually the value of their currency against the dollar has dropped pretty significantly. I think Japan is a really key example of this. And so one of the things that sets up is that to even just hit the same mark as last time, these countries are actually going to have to increase their contributions in their currencies by, I think Japan, the estimate is like at least 25% just to be equal to what they did at the last IDA round. And we're seeing some similar challenges for European countries as well. That makes it a really difficult picture, right? And so I'm curious about those challenges. You've talked about this sort of first mover pushing others. We did see that Denmark announcement a few weeks ago. Do you think we'll see some other announcements at these meetings? What do you think the conversations will be like in terms of trying to find ways to get increases despite the currency constraints as well?
I think the meetings are going to be a really important moment for donors to do two things. One, get excited about the policy proposition that IDA is offering for its next cycle. As you said at the top of this conversation, there's one part of this that is about how do we unlock the money to do development. The other is how are we going to invest? How are we going to show results with this money? So this is an important moment for donors to see the proposition that the bank is putting out there, get excited about it. Second, I think it's very challenging. Most of the folks who will be in DC next week are supporters of IDA, are champions of what we're trying to do together, and they are navigating very difficult politics back in their home capitals. And so the more we can arm the folks here next week with the great reasons, the great investments to go back, and they're going to have to, in some cases, fight for these dollars, the better. So I hope we see some more early pledges that will just build up the momentum. But I know the bank is also not encouraging early pledging because we do want to let that process of getting excited about the policy and having the negotiations that really are sort of behind the scenes about if we can do this, can you join us and let's do this together. That's an important part of the process that I think this year will be especially important.
So I know the World Bank has put out some information about what it expects some of those policy priorities to be like in IDA. What can you tell us about sort of what's on the docket for what this money could actually achieve? What do we see as the priorities? How might that be a little bit different than the sort of past IDA replenishment?
Yeah. For me, it boils down to three big areas that we need IDA to invest in. One is getting growth restarted in a lot of these countries. the real solution to all of the financing challenges we're talking about is going to come from growth and dynamic economies. So that's number one. Two, we know from years and years of history that growth doesn't benefit everyone equally. And so the inclusion piece, investing in human capital, safety nets, that is a super important part of what IDA is going to do. And then third, we're also going to see in this cycle how the livable planet piece that President Bonga has committed to manifests itself in investments. And for me, that's going to be things like investing in adaptation. How do we build agricultural systems? How do we build food systems that are resilient to the more volatile temperatures we're seeing already today? So I think those three pieces, broken down into the bank's kind of technocratic languages and lots of scorecards, but it ultimately boils down to those three things are the focus of the next round of IDA and all super critical.
Yeah. I guess another question I have is, and this has come up in a few conversations I've had, is whether the bank has done a good enough job to date of selling IDA, given that we're in this really challenging environment to raise money. We're in this sort of era of a lot of replenishments happening, sort of one on top of the other, back to back to back, which just means that all these, donor funds are constrained because it's a lot of the same donors putting money into most of these sort of global vehicles to address development or climate issues. So do you think the World Bank has done a good enough job? And if not, what does it need to do at the annual meetings to sort of convince donors?
I'm not in advertising or marketing, but I feel fairly confident if you were actually selling something, you wouldn't call it IDA, you wouldn't make it quite as technocratic as. But to be totally honest, I don't think any of us thought this was a sales job necessarily. I mean, IDA is this incredible manifestation of global cooperation that is 60 plus years old, right? And Bretton Woods coming up on 80 years. And if you think about where we are now and all the ways in which cooperation is getting harder and multilateralism is threatened, it's sort of amazing to think about the conditions that led to the creation of this proposition, that we will come together as a group of nations to make sure everybody benefits from the basics of life and livelihood. So I think for many years, decades, IDA has sold itself. It's been something that has been a cooperative effort. The job now is just to remind countries about the great thing they have built together. And I think the bank has actually this year really understood that, has opened its processes, opened its evaluations, the way it talks about itself to a group of champions so that we could get out there and really add our voices in a way that hasn't been the case in the past.
Yeah, I do think the one thing that does seem clear is that this IDA replenishment has been a bit more of a outward-facing, public consultative process, including with civil society, whereas in the past it's often actually just been a behind-the-scenes negotiation between IDA deputies. So I do think that is something a bit different than that we've seen this go-round. I'm curious, one of the things in conversations I've had with folks on IDA that may present a challenge is sort of, do you come up against potential trade-offs between hitting that $120 billion target, between the money, and then between the concessionality? Because one way to get to $120 billion is more leverage, which maybe means less grants or less concessional terms on certain loans, or changing the pricing of loans for IDA. And so this seems to be a key tension point to me in these conversations. And as you've said, the sort of grant financing, especially in this time where many of these countries are facing really significant debt, is pretty important. So what do you make of that tension? Where do you think things will sort of end up?
Yeah,
and is it okay to sacrifice not getting to 120 billion in order to maintain some of that concessionality?
I think you're spot on the trade-off between volume and pricing in a way. What I come back to is the role that IDA plays that is different from any other fund out there is really for the poorest, right? And what we know is that 60% of the world's population is stuck in a poverty trap. We have dozens of countries now where debt servicing is exceeding the amount that countries are spending on health and education. So now is not the moment for a group of countries to take on more expensive financing from the international system. And what is super compelling to me is that IDA is the place to make that either grant or deeply concessional resource available to countries. Now, IDA is also a portfolio, so I think there are some countries where we absolutely will put a different priced debt into action. The other way I think IDA is increasingly thinking about, or the development community is thinking about financing, is by sector. There are certain sectors, basic healthcare, where you need concessional public finance. There may be other sectors, even in poor countries, the energy sector, where you can get away with more debt, where you can build a stack of financing. So I am absolutely in favor of living in the real world where money is scarce and we have to be super efficient about what can only grant or near grant financing do. Which countries should that go to? What sectors should that go to? And then for other areas, let's start to think of IDA as an essential component of a stack that might have other prices. So for me, that adding all of that up when you look at the portfolio of countries and sectors still requires donors to be generous in the way they capitalize IDA, but also means IDA's doing the right thing, bringing in other kinds of financing, borrowing to leverage up its financing even more.
Great. Well, Gargee, thanks so much for your time. It's always a pleasure to speak to you, and I hope I see you around during the meetings.
See you next week. Thanks again.
Yeah, thanks so much. Thanks for listening to this special episode of This Week in Global Development. If you enjoyed this episode, please share it, or you can leave us a rating or review. We'd also love to hear from you if you have any feedback or want to get in touch. You can find me on social media at Adva Sal, or send an email to podcast@devex.com. Be sure to sign up for our daily newswire and our Invested newsletter, which covers development finance, for more of our must-read insider coverage of global development. Thank you for listening, and stay tuned for more episodes from the World Bank-IMF annual meetings.